Good afternoon, everybody. Welcome to the recap. I'm Laz, filling in for Scott, the Red Dog Redler, who will be back tomorrow bright and early for the morning call. Let's get right down to it. I mean, the market today, we came in this morning, a little bit of a gap down, was substantially lower last night. I think the S&Ps were down as much as 17 handles, late Sunday evening. Market started to snap back pre-market. We were only down maybe 7 or 8 handles, and by the time we opened, we were just down fractionally. So the market absorbing what was, we pointed the finger. I guess the media pointed the finger at the election in France this weekend for the gap down, but the market absorbed that down open pretty well. If we go and we pop over to the charts here, you're going to see what I'm talking about. I talked this morning a little bit in the morning call. Let me get rid of some of these annotated lines here. This is today. Again, really not much to do or say about today. We saw a little bit of a pop off the open. Didn't really amount to much. There was very little momentum. Flirting with these prior lows. Again, we're now back down to these prior lows, which is just a stone's throw below 1360. I think what the market will do here is probably base here for maybe, again, I'm just giving you my opinion. You might see a 2 to 3 day base here. And then, we could potentially push lower. We could reverse and see higher. This is one of those tapes where you have to be very careful, at prior lows, just like I said last week, also be careful at prior highs. In just a matter of 3 days, we were back down to the lower end of the range. So trading the range can be sometimes difficult as traders are always looking for that breakout or breakdown in this case. So keep an eye on that. If we look over at the spiders, which is really the ETF here, much lower volume today. I think that's the one thing that I would, kind of throw out there. Friday's volume on the sell-off was substantially greater, and snapping back today mildly on much lower volume. So we're just going to continue to take the temperature here of the market. Again, I think a 2 or 3 day, basing in here will be a tell for potentially what may come later this week or next week. If we do violently snap back to the upside, again, we still remain in this sideways range. This 21 EMA, which is one of my key moving averages, something we teach in the active trading course. Flat average generally lends to range-bound trading. At some point, this 21 will turn down or resume back to the upside. Until that happens, you need to remain on guard. So we're going to keep an eye on the S&Ps as they develop over the next couple of days. Moving on along to our other sort of market leader, benchmark, staple, tons of eyeballs stock is Apple. And we can't really go a day without talking about it because there's just so much activity and opportunity here for both the short-term traders and longer-term. Apple, continues this sell-off. We did see another new low today, but it did snap back nicely. We look at an intraday chart just to get a clearer idea. Flirted with this 562 level. It rallied right off the open. We saw this big spike in price, like a $12 move right off the open, only to come back to the lows and then, come back to the highs and sort of fizzle out into the close. So not much to report here. Again, we could see a short-term low here and a tradable bounce start to develop. I don't suspect you're going to see a wild upside move. Again, we couldn't even hold a 1 day pop. Just watch this as it starts to develop here under these declining averages. That's sort of our key. You could see a 1 to 2 day trade back to maybe the mid 570s or even 580 before we have to contend with these downtrending or declining averages here that you can see pushed us lower just a matter of a few days ago. So keep an eye on how that develops over the next couple of days. Moving forward, a couple other stocks that had earnings. We're going to talk about LinkedIn. Sort of plays into this Facebook. I talked about it in the morning call, that 120 area. We look at the weekly chart, major, what I'm going to call significant resistance up here. This was the IPO high. That 122 area was actually the high of the IPO. But having some trouble here in this 120 zone. Saw that big gap up on earnings on Friday. Didn't really do much on Friday and today, right back down. So, even the good earnings, the ones that are gapping up here, starting to fade off a little bit. We can look at some of the other ones around the horn that had some good earnings. ISRG, not really doing much, but, breaking down Thursday, Friday, just consolidating here today on the lows. We need to keep an eye on that. We could be setting up for some lower prices. Amazon, another one. Keep an eye on, again, below this gap, earnings gap low. There could be a a trade to the short side here, starting to sort of roll over, if you will. But again, maintaining this bullish stance. So we'll keep an eye on that one as it develops. Just for disclosure purposes, I am short some Amazon. Moving forward, take a look at the banks. Goldman, our key bank here. A little bit of a bounce here on the sort of the lower end of the range. Really not much change structurally here. Nothing really overly bullish, nothing overly bearish, just sort of a little bit of a bounce here. We saw a sell-off from the 116 area down to today's low, which is right around 108. So a nice 4-day trade to the downside. Could see a 2 to 3 day consolidation or snapback. Again, notice here the 8 and the 21 downtrending. And those are really the key here of what to look at. Really stuck below the 21. Every snap into the 21, which is this yellow orangish line that you see, has been sold. So we'll keep an eye on how that develops going forward. Couple of earnings plays tonight. I think RAX just came out. Not 100% sure what happened here, but something that was flirting with highs. So we'll keep an eye on that for tomorrow, as well as Electronic Arts, EA. And I think they actually are getting beat up in the after hours here. Lastly, we'll talk about this Vertex VRTX, which really was the sort of intraday bullish trade of the day, if you will. Let me pop over here. So intraday. Okay, so intraday, again, this was a trade on the VTF today. Nice setup, good bullish tone to it. We took out the highs through lunch, which is always a good sign. You can see volume come up here into this. Our moving averages on the shorter time frame intraday, bullish all day, and the stock had a nice move. This is a nice clean day trade for those of you that participated today. Something a little off the cuff, little bullish, nice bullish follow through here in Vertex. So keep an eye on that going forward. That being said, it's still a mixed bag. You have technology stocks, some of the predominant leaders, seeing some selling. Our key stock, Apple, really nice little bounce off the low 560s, but nothing really to write home about. Let's see how this develops over the next couple of days. Same thing with the futures. We held support today. Really no bullish price action intraday, but at the same time, let's see how this develops over a 3-day window. I think we'll have a lot more color after we have a little more data to make a determination if we think this market can snap back and stay in this range, or we're going to break down and possibly break through support in that 1360, 1355 area in the S&Ps. That's really sort of the level of support I think a lot of technicians are going to look at for a trade. So with that, a planned trader is a profitable trader. Scott will be back tomorrow with the morning call. Have a great night, everybody.